please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, let's talk about numbers then. Larsen & Toubro came out with numbers that were in line with estimates, but tepid order inflow guidance may cap the upside today. Varinder joins in with more details. Varinder, morning.
Well, on the first face of it, L&T numbers looked really good, really good. But, then if you dig deeper into it and you understand there was one-off, we pointed it out on Saturday itself that, that one of the segments of the company which used to be in losses in the sequential quarter suddenly reported an EBIT of nearly 350 crores. Okay, so where did it come from? That was a Nabha power plant, which Anisha was also educating me, that could be the one-off which could come into this. And 173 crores, another exceptional item which was reported in the numbers. So if you have to strip that off, the numbers are coming in line. We were expecting 9.7, 9.8% margins. If you strip that off, the margins are 10.2%. So, almost in line with what we were expecting. Also, the commentary was okay. Weak on the order guidance, which I'll hit on too. But the important thing was that on Friday the stock was surging up because people were believing that EBITDA will be 3,000 around 3,000 crores, and hence the stock was up. The negative thing came in from the order guidance. FY18 order guidance cut has come to flat to marginal compared to earlier 12 to 14%. So it's a sizable cut, from 12 to 14% to flat to marginal. This was something which no one was anticipating. So the stock had already run up on Friday. The results are in line, not as strong what market anticipated, and a negative margin guidance cut which no one expected. I believe that the stock will stop here because it has already run up and could see red today in the market.
Okay, Varinder, but talk about having a busy weekend. I mean, the L&T was something you were tracking and you're feeling quite slippery as well. Some of those OMCs came out with that set of numbers. So a lot of companies will be reacting. Run us through all of them from the oil and gas space.
Nigel, the one theme which is playing out in this earnings season is that OMCs are reporting weaker GRMs. The upstream companies like ONGC and Oil India are reporting, great numbers because the way crude is behaving. Crude moving up is not a good news for OMCs, and crude moving up is good news for upstream companies, and that's the thing which is being played out. For if you remember, HPCL, IOC, they reported bad set of numbers. GRMs were much lower than what people were expecting. Same thing happened with BPCL. If you just see the revenues, excise were lower than what we were expecting. PAT was boosted by inventory gain of nearly 680 crores. The core GRMs came at $6.50 per barrel against an estimate of $8.5, $9 per barrel, which the street was expecting. Motilal clearly says that the EBITDA is significantly below their estimate. The core GRMs of $6.50. Of course, they are lower than what they were expecting, but also think that the Singapore refining GRMs are trading at $8.3 per barrel. So even from the benchmark it is lower. And going ahead, Q3 crude is moving up, and things are not looking great for OMC still. So Kotak, Motilal, all these guys are not happy with the numbers coming in. CLS of course got a chance because they were negative on OMCs, and they are clearly seeing it's 33% below their estimate and everything. So they have been negative. All India, strong set of numbers, can't complain because EBITDA came at 1,000 crores against our estimate of 910 crores. So around 100 crores beat coming in from there. Even the profit was at 646 crores compared to the estimate of 511 crores, so around 20% beat in terms of the profit numbers coming in from Oil India. And going ahead, the important thing is that Q3 will be much stronger for Oil India and ONGC because crude in Q2 was 51, now it is 61, 62, so it will be great. ONGC, so watch out for this space because the reports which are coming is that Venezuela may go bankrupt in the next few days, okay, which is coming in. Now why it is important for ONGC, because Venezuela contributes nearly 5% of production for ONGC Videsh Limited, which is one of the subsidiaries of ONGC. So they have production in there. Not only ONGC, but I'll also watch out for oil and gas space because, Venezuela is home to nearly 1.3 million BOPD of refining capacity, so it impacts the entire refining space as well. So let's see how the thing comes in. It's a developing story, but the first knock may come on ONGC because they have the largest contribution coming in from Venezuela, if that news is correct.
Okay, all right, Varinder, thanks very much for that. Remember that pharmaceutical companies such as Glenmark as well as Dr. Reddy's have exposure to Venezuela. They've cut back in terms of supplies for many quarters, but maybe there could be a receivables issue which could probably crop up again for the likes of Glenmark especially. But nonetheless, Coal India would be the other one which would be in focus on the back of what was a weak set of numbers.
That's right, Ekta. It was a miss on all parameters. If you take a look at it on the top line, there was a growth of around 12% approximately approximately. We were working with a growth number of around 18 to around 9%, so not good. One part of the of the top line puzzle we already have. That's the volumes. That has been good in the past quarter. It was higher by close to around 13.5%. The problem is that the blended realization, they have given it at around 1,331. That indicates that in fact it's down by close to around 1 to 1.5% on a year-on-year basis. Some part of the street really was working with a bit of an increase on the realization. So the realizations coming in lower, that was one big negative. The other one was that the e-auction volumes, yes, they were expected to pick up, and they did pick up, because the volumes came in at around 23 million tons. So that was a good growth if I take a look at it on a year-on-year basis. But realizations at 1,614, that was a little bit disappointing. Some part of the street was working with a number of around 1,700 as well as 1,800 on a per ton basis. So clearly that as well was a bit disappointing. Margins, well, we were working with double-digit margins. It came in at only around 6.8%. And remember, it's coming in on a very, very low base. Employee benefits, it was up close to around 9% on already a high base, came at around 9,100 crores. So that was that's the pain point. And my interaction with the management tells me that in fact the provisions out of that 9,150, remember they've taken a wage increase. So the employee cost of around 9,100, that includes roughly around 1,600 crores of a provision on account of that wage increase. But clearly these numbers will not go down well. The profit number as well missed our estimates by a large margin. Not just the operating profit was not good, we also had higher taxation as well as lower other income. In the first half of the year, they've done an EPS of less than 5 rupees. Last year in the first half of the year, they did an EPS of around 5 rupees. Second half of the year, they did 10 rupees. So that's how we came to around 15. Now in the first half of the year, they've done an EPS of less than 5 rupees. I don't know whether they can even achieve that 23 rupees that we were talking about in terms of an EPS for FY18. Negative, better to be, an employee of Coal India rather than a shareholder. A lot of those GST rates were tweaked on Friday evening. Mangalam was tracking that very, very closely, and he joins us early this morning to tell us what's the impact of some of those GST rates, being lowered. Hey, Mangalam, morning.
Good morning, Nigel. So the FMCG sector, that one stands to be the biggest beneficiary coming in from the lowering of GST rates. 28% to 18% cut for mostly everything that you can imagine. Razor blades, you have washing powder, shampoos, detergents, deodorants, even chocolates and malt-based beverages. So the big beneficiaries there would, of course, be the likes of GSK Consumer, the ones who make Horlicks. Hindustan Unilever, nearly 60% of their portfolio now comes down from 28% to 18%. Godrej Consumer, Gillette, as well as Jyoti Laboratories. Other cuts for consumer companies, big beneficiaries will also be these luggage makers, the likes of VIP Industries as well as Safari, as the GST on luggages is cut down from 28 to 18%. Remember the management telling us on CNBC TV 18 that they expected something like this. Building materials companies, we have been talking about this, and those stocks have also gained some traction over the last two trading sessions. So the likes of Kajaria, Serra, Somani, even the plywood particle board makers of Century Ply, Green Ply, and the likes of HSIL and Serra Sanitary Ware will be in focus. See some bit of green. The big positive surprise came for restaurants, because the street was working with 18% cut down to 12% with no input tax credit. The government said no, go ahead and cut it down to 5%. So that means your and my restaurant bills will come down by about 5 to 6%. That would mean higher business for restaurants. So positive surprise expected for Jubilant Food Specialty Restaurants as well as Westlife Development. The only sore point would be the paint companies. There was a rate cut expected, and that did not happen. So expect a bit of red on Asian Paints, Kansai Nerolac as well as Berger.
Okay, all right. Thanks very much for that, Mangalam. But what are brokerages making of State Bank of India post its Q2 numbers? Abhishek joins in with more details on that, as well as what took place in the analyst meet. Abhishek, morning.
Well, good morning, Ekta. The brokerages have made of the result is that the lower slippage and improvement in provision coverage is a very key positive, but weak top-line growth remains a concern. And there has been sharp earnings cut after the analyst meet. So what happened in the analyst meet? In the analyst meet, management has mentioned that Q2 corporate slippages is not the trend going forward. They also expect a few lumpy accounts which may slip in either from watch list or the restructured book. And RBI is also conducting the audits of the accounts, and this time the audit is very tight. brokerages across have increased the target price based on the capital raising plans that SBI have, but on the other hand have cut their FY18 earnings estimate anywhere between 6 to 38% based on the fact that credit cost for the rest of the quarters will be high. So if you look at CLSA, while it has increased the target price to 400 from 350, it has cut the earnings estimate anywhere between 6 to 13%. Same goes for Motilal, that they have increased the target price to 415 from 341, but have cut earnings estimate by 7% for FY18. The highest cut is by IDFC, wherein the target price has been increased by 36%, but earnings estimates have been cut by 38%. Back to you.
Okay, all right, Abhishek. Thanks so much for that. Well, on that note, we'll slip into a short break. You come back and we'll get you all the cues coming in.
Get talking about the commodity and currency space. Manisha is with us to tell us about what she's tracking. Well, Manisha, morning seems as though crude is top of mind.
Well, yes, and we have started Asia with good gains for most of the energy products. So if you look at the crude oil prices, we are holding on to those two-year highs with the Saudi Arabia and Iran tension surfacing, and various statements coming in from both the countries is keeping the crude oil prices up. What also has seen strength has been the energy products. So if you look at the gasoline prices or the natural gas prices for that matter, they are trading on the higher side, up nearly 10% for this month already, as you see the winter demand from the Western countries surging up. Inventories in any case have been declining. They are just about or below 5-year average, and that has been supportive for crude and products. In the other space, it's the precious metals which are holding firm as well. Remember, the previous week was the first in many that you saw positive returns coming back for this, and we have started gold, silver, etc. on a positive note in Asia. The US dollar is on the weaker side, with the dovish Fed chairperson coming in. That really seems to be assuring the gold and silver prices, and the markets now would only watch out for the final FOMC meeting in December before this year ends. There's not too much to look forward to when it comes to precious metals as a sector.
Okay, all right, Manisha, thanks so much for all those details. Well, as promised, let's shift focus to the derivatives market then. Mangalam's back with us. Mangalam, FI's quite negative action we saw on Friday.
Quite negative, Nigel. You know, people play poker on the weekend. Looks like the FIs went all in. The FII bears went all in on Friday's trading session. They sold in the cash market to the tune of about 529 crores. Index futures, they've been consistently selling on, and on Friday they amplified that selling to the tune of what, 1785 crores in index futures. And not just that, they sold at the top. The premium has come down from 53 points to 12 points. And also keep an eye out on the fact the FIIs, who started this series with what, about 70% long exposure in index futures, have consistently pruned their positions down all the way up to 53%. So that means there is one FII short for nearly one FII long in index futures. Not just that, if you take a look at the index options as well, there was a large amount of put buying, nearly 6 long puts added per call, and a large amount of calls selling too. So clearly, cash market, index futures and index options, the FIIs have gone all in. Let's see whether our markets sustain at higher levels and we get a reason for some short covering coming in on there or not. As far as stocks are concerned, in fact, if you take a look at the individual strikes as well, 10,300 was most active. So the 10,300 call and the 10,300 put, both of them added a similar amount of open interest, and together the premium is around 210 odd rupees. So maybe the smart money is playing for that 200-point range on either side of 10,300. In terms of stocks, L&T, SBI as well as Godfrey Phillips saw some long positions, L&T ahead of the numbers, as well as some shorts seen on Aurobindo Pharma and Hindustan Petroleum.
Okay, all right, Mangalam, thanks very much for that. But moving on to our Bullseye Corner, our contestants this week, Rakesh Bansal, Gaurav Ratnapariki, Vishal Malkan are battling it out. So let's listen in to their picks for day one.
My first call is a buy call on Dredging Corporation. Buy Dredging Corporation. Stop loss 690, target 920. My second call is a buy call on Zen Technology. Buy Zen Technology. Stop loss 77.80, target 112. My third call is a buy call on India Bulls Venture. Buy India Bulls Venture. Stop loss 289, target 318. My last call is a buy call on Ajmera Realty. Buy Ajmera Realty. Stop loss 279, target 311.
I have a buy call on TVS Motors. Stop loss 692 and target 739. Next one is a buy call on Union Bank. Stop loss has been kept at 163, whereas target is at 174.80. The third one is also on the long side, and that is Ultratech Cement. Stop loss 43.48 and target at 46.40. The last one, however, is on the short side, that is Havells Futures. stop loss 515 and target 481.
Okay, then let's get to Vishal Balkan's picks. His first pick is a buy call on REC. Well, there he has a target of around 170, stop loss at around 158. Second pick is also looking to buy Tech Mahindra. Stop over there he's placing at around 485 rupees, target at 525 rupees. His third pick is a buy call on Century Textile. Over there the stop loss is placing at around 1,335, target of 1,425.